Good evening, traders. Hope you all having an awesome day. A quick one here on net gas, gold, silver, crude oil, starting with natural gas. But let me show you what I've said in my last video so that we can connect the dots from there. I'm mainly looking at this level for my possible buy entries. Now we're in the level of trend continuation zone. So all you want to look for a valid bullish engulfing pattern within this zone. If you are an aggressive trader, that is your entry, keeping your stop loss below, take profit 1-2 initially, manage your trades accordingly. Or you want to go for double bottom trade exactly if you are not an aggressive trader. Keep a 180 stop loss initially and then manage your trades. But in general, we are now in the oversold situation in the RSI and correction is expected. But with that, if we have a bullish condition here, that will become a strongest entry because in that case, we'll have a three confluences. Number one, we are in the level of support. Number two, we'll have a valid bullish engulfing pattern or valid bullish pattern like a double bottom. With that, we have an oversold situation. So that makes it the three valid factors to enter my buy trade. Perfect. So what a move we have got here from our level of support that has been mentioned clearly yesterday. Now that is a very good lesson to learn that after a losing trade which we had here on capital.com right here, that was a losing trade. We had a winner right here, but we entered at the exact same condition. It is something I'm going to leave it for the weekend's video, and it is a very good lesson to learn for us. Again, that is something I'm going to discuss in a weekend's video. Now, what to expect from here? Since we had a nice bounce out of the level of support that was also sent to the members, and this entry was also mentioned to my members, the members who are in touch with me and double checking their entries with me, and that is something I want that you guys spot the entries, double check with me. If it's valid, I'll tell you that if it's valid or not. Now, at this point, we are getting a rejection from 50 EMA. If that happens, that would be a valid bearish signal. So we had a nice push up. As you can see, 2 ATR target has been hit. The ATR of this candle is 5, as you can see right here. And 2 ATR mean 100 points target has been hit. Now we had a rejection right here. For the price to continue to push high, it must break above 50 EMA and then start to push higher. If not, if that turns to be a bearish engulfer, in that case, we'll have a valid swing high bearish engulfing entry. And again, the target would be 1 ATR initially, and then you can manage your trades accordingly. But that is something I call an aggressive entry, the buy entry. Now, if the price, let's say, comes back to my zone again, forms a double bottom, which is my bullish engulfers, or a pin bar, in that case, we'll have a valid double bottom pattern. Let's say we have an entry here, we enter here, exit here, buy here. If we have an entry condition, have a stop loss below the zone, take profit, you can go 1-1. So that is all I'll be looking at. Look for this valid candle. If we have the valid bearish engulfer, we'll have a valid sell signal, short term, and then we will look for the valid buy entry. So keep an eye, possible double bottom, or if we are broken above, then we are just looking for the bullish trend continuation trades. Here on capital.com, bouncing up from the level of minor support. Now again, if that turns out to be a valid bearish engulfer, we have a sell signal, or if we have a double bottom right here, exactly how we marked on our Wanda, something like this. The candle must reject from this purple box. If we have a close below this low, in that case we'll see a possible push down. If rejection, in that case we have a valid double bottom pattern, but look for a valid bullish engulfer, so 382 candle from this zone. So keep an eye, it is an area from where I'm now expecting a possible bounce again if we have a price come down to this zone. But again, as we are still below 50 EMA, if we have a bearish engulfer, sell. If the price pushes up, forms bearish engulfer below 50 EMA, I'll still gonna go for my sell trade. So as long as we're below 50 EMA, look for your valid pullback bearish entry as well. Exact same condition, rejection zone right here, bearish engulfer, look for your entry, exit, look for the valid double bottom. If we have that, we are good to go long from the trend continuation bullish zone. So keep an eye. These are the entry conditions now I'll be looking at for my possible buy trades. Next up, we have gold. Gold is ranging sideways. As you can see inside the box, like I've been mentioning for a couple of days, that I won't be taking any trades unless we are broken above or below. For now, expect some more range out of gold. I'm not taking any trades. Once we see a breakout, clear breakout, we are then going to look for the possible sell trades from here, below here, and above here. We're going to look for the possible buy trades. So keep an eye. Wait till we see a clear direction out of gold above or below. Once broken below, pullback entry bearish. Once broken above, pullback entry bullish only. Next up, we have silver. Silver is nicely pushing down, rejected from the zone right here I've mentioned in my last video. We're getting a possible double top on 1 hour. We already had a double top on 1 hour right here. First top, second top, rejection. Looking at that, I'll keep my stop loss above the pattern and take profit. I can go 1-1 initially and manage to 1.421. It's totally up to you how you want to manage, but initial targets will be again 180, which is 14 cents at this point on a 1 hour time frame. On 4 hour, that also is a valid double top. If that happens, we can see a possible push down out of silver. So let's see how it goes. Possible sell entry, not buying unless and until we are not broken above these highs. So I'm now expecting a price of silver to at least give us a good and deep pullback. Lastly, we have crude oil. Crude oil is broken back below 50 EMA. Now, again, a fake out, but if you see that we haven't got any entry condition. So let's adjust the box and accumulation, which is right here. Now, if you see right here, if you call it a break, yes, that can be a break. But if you look at these wicks, we are still not broken and close above these highs. So very important for the price to completely break out from this accumulation right here, from this swing high and from this swing low. So something like this. So in that case, we are just ranging sideways until we are not broken above. So for the valid pullback entry bullish, must broken above these highs right here. And for the valid pullback entry bearish, must broke below these lows right here. In that case, we are looking at the level below in yellow, which is right here, as you can see, for the possible double bottom on a daily time frame. So we are still bearish for crude oil as we are broken below 50 and 20 EMA and price making lower lows, consistently making lower lows, and we have a chance the price will push down out of crude oil. And it is an area once the price hit the zone below, I'm expecting a very good bounce out of. So keep an eye, still bearish, not bullish, unless and until we are broken above this accumulation. And it is an area above from where I will look into enter my counter sell trade. So keep an eye and let's see how it goes. That's it for commodities, guys. Hope you got a value. If yes, give this video a thumbs up. Subscribe if you're new so we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next video. Have an awesome weekend. Take care.